Wait, Ron. Welcome to NASDAQ Trade Talks. I'm your host, Jill Malantrino, global markets reporter at NASDAQ. Joining us at the market site in Times Square, we have Alex Mashinsky. He's the CEO of Celsius Network. We're going to take a look at harnessing blockchain to provide economic opportunity for all of us. Alex, it's great to have you back with us at MarketSite, and it's a big topic of conversation that we're covering right now, getting everyone to navigate into digital assets.
Sure, it's a new set of rails, so people are very cautious, kind of testing it out. I know Bitcoin is 11 years old, so we've had plenty of training wheel time to get adjusted, but institutions and a lot of retail is still pretty cautious, don't understand what this is about. Is it a revolution? Is it an evolution? How do you take advantage of it? What are the winning trends? So all that is still in the air.
You have an extensive background in bringing new technologies to market, and this is something that you believe in. How is it working for people who are unbanked? As you say, unbank yourself.
Yes. So I live on the bleeding edge, right? Disruption with voice over IP, with ground transportation, wireless in the subways, things like that. And here we have the same thing. We have 700 years of banking being disrupted by a new, by the blockchain, by decentralization. And really, it's all software-based solutions. So software is eating Wall Street, right? If you think of what's happening every day. And the opportunity is really to replace the toll collectors and the people who are standing in our way, who are not allowing us to earn money on our money, with a network that is acting in our best interest. And that's really what has not been happening. Every year as banks merge with each other, there's less and less of an opportunity for people from the outside, the retail or small companies, to take advantage of their own capital or have their capital earned for them.
So when you think about the Fed and other central banks continuing to cut rates into negative territory, this has to be good for the digital asset movement.
Exactly. So the Fed and international monetary systems are all accommodating the existing debt load, right? Their job is to make sure that the bubble keeps inflating instead of blowing up. And because of that, more and more people are looking for the safe haven. So you have to think of Bitcoin as doomsday insurance policy, right? But digital assets are, there's a variety of digital assets that represent many, many other opportunities, not just doomsday insurance. So Ethereum, for example, with its blockchain, is the rails for transactions, right? Smart contracts and things like that. And you can see many, many new issuers basically adopting that. Celsius Network works with 150 institutions. Today, Bakkt launched its future contracts, so you have a lot of new institutions coming on board. The SEC slowly opening the gates, and all of that is great for digital assets because there is basically stagnation on the other side of the aisle.
And you're starting to lend and borrow cryptocurrency as well.
Right, so Celsius' main focus is earning interest. 90% of our business is enabling people like you to earn 8, 9, 10% on your capital versus 1% in the bank. Right, but we also lend against these digital assets. So we do both. But the main business is really, because the banks and the financial institutions do not allow you to earn capital on your capital, we basically using the new rails to enable you to earn high single digits in return on your dollars or yen or euro.
Well, how are you able to do that, to offer out 8 to 10%?
So all we do is we basically do exactly what the banks do, but we give 80% back to the depositors, where the banks and the financial institution give 80% back to their shareholders. Mm-hmm. So the question is just when a bank pays a dividend, it doesn't pay it to its depositors, it pays it to their shareholders. And we just reversed it and basically said the new rails bypass all the toll collectors. Let's take all that added value that we're unlocking and give it back to the depositor. And that's why we have over $400 million in assets now in less than a year, and over 100,000 users, so it's accelerating very quickly because people recognizing that, okay, why am I sitting with my bank? Why am I sitting with my financial institution? Let me move the assets, digitize them, right? Take $1, buy a stable coin like USDC or TUSD, and earn 9% on it, right? When I want my dollars back, I just withdraw it, redeem it, and I have my dollars back.
Well, there still are headwinds in the crypto economy. Why do you think that exists?
Well, there's doubt about, is this really a scalable solution? Mm-hmm. There's fear because we've heard that these things are being used for bad things. That was 10 years ago. So until we clear through all of that and until enough reputable firms come in, there's always going to be, right now it's only early adopters. We did not have the mass adoption yet. you know, and we have to pass the baton from basically the early adopters to the mass adoption, cross the chasm, and really scale as a community to, we're doing it for the people, right? We're enabling, bringing power back to the people, where again, your bank lends you on your credit card at 24%, but they use my money. It's not their money, right? They're using my money for that. They only pay me 1% for that deposit. So it's just not a fair system.
Right, but I mean, in fairness though, the concept around cryptocurrency is decentralization, but if you want that mass adoption, part of it is going to have to be regulated or centralized somewhere. I mean, it's consumer protection at the end of the day, so it can't be 100% decentralized.
You could be decentralized and regulated at the same time. So we are definitely not one of the believers that everything has to be fully decentralized. We have one leg in decentralization, so we use 25 blockchains, but we have also one leg in the traditional world, right? And we're Reg D SEC registered, we're FinCEN registered, we are compliant to all of the KYC ML rules, and we've been doing that for over 2 years. So there's the notion that you don't have to be regulated to be decentralized or run on the blockchain is completely false.
All right, well, thanks so much for joining us at MarketSite.
Thanks for having us.
And thank you for joining me on Trade Talks. I'm Jill Malentrino, Global Markets Reporter at NASDAQ.